How you doing, everybody? This is June from Turning Point Life Investment, and of course, I have Chris here with me.
Hi everyone,
And,
beautiful day, hot, beautiful day here.
and today is June 23rd on a Thursday. What's another? It seems like every day we have a webinar, it's always been a crazy day, and today's definitely no exception to that. I guess it makes us have something to talk about. Go ahead, Chris. Why don't you talk about the market today?
Sure. The market, we're looking at a 9-month daily view for the S&P 500, and today it actually put in a nice hammer. I know a lot of people don't think it looks like a hammer, but it's a hammer today. Nice volatility too. I mean, we could just see that the bears just sold prices just so much, and then they weren't able to hold those lows. They actually came up higher. Yeah, we go into the hourly view. We even have a much clearer view. One thing you want to notice is after this morning's gap down, there was a big black candle and a lot of huge selling. The next candle after that was a hammer. So we have a hammer on the hourly view, and we have a hammer on the daily view. Now, not just because there's a hammer doesn't mean, hey, you know what, it's time to buy. Let's all jump in and go from the long side. Still, I want this morning's gap. I want the market to get above it tomorrow or the next day. Just some bullish follow through. And if we get that bullish follow through, it'll mean that today's hammer was significant, and we'll be most likely retesting the 1300 level. Now, look, today's volume was pretty high, and from my experience with a high volume hammer, the market usually doesn't retest like the lower shadow of the hammer. It usually gets some bullish follow through within a couple days and continues up higher. Anything you would like to add to that, Jim?
Yeah, I mean, I think volatility and just a lot of wild swings recently, and just be careful out there. I mean, if you look at this market, it looks like it's a Swiss cheese. Look at all these holes and gaps that we've been having. Tuesday we had a gap up. This morning now we have a gap down, and also back here a lot of these previous gaps. So quite volatile, especially right in the morning. And you never want to be too one-sided in this market. You got to stay, and I'm sure I'm repeating myself, and I've said this many times, is you just got to be able to switch on a dime. I mean, I think a lot of times this market can really surprise us and really challenge our thoughts about what the market is capable of doing. And today is definitely no exception. You had a huge open down on the morning, like Chris mentioned, and then all of a sudden you get this huge pop out of nowhere. Now I'm sure it's news related and all, but still you just don't know exactly what's going to happen next. And even though we did put in a hammer, this 1260 level is basically that support line, and so if 1260 breaks, that's another significant reversal. Especially breaking that support level. But I suspect that with this hammer, we probably could get some follow through. Today's reversal kind of reminds me of the Dallas Mavericks on Game 3, where they came back in the fourth quarter. And this is pretty much it. You carry that momentum into the next few games, and that could be it, right? So all we need to do is wait for some kind of follow through. Like Chris said, wait for some follow through, and more than likely we can probably get back to 1300, if not higher. But still, that 1300 is that strong resistance level right there. But I think today is pretty constructive if you're bullish on this market, or some sort of bullishness, at least short-term wise.
Yeah, we can, just looking at this daily view, we can really see that this market since, maybe let's say after June 6th, it has really just been trying to come up with a base. You had a bullish engulf pattern, a morning star pattern, the market rallied up from there, hit a hammer today. The bulls they're not ready to give up just yet. Right now they're just deciding, is price is cheap enough now so that they can push the market higher. And it looks like a lot of bulls are coming back in and realizing, hey, they do look cheap. Let's try to see what we can do and bring these prices even higher or back up to their highs. The next thing that I wanted to take a look at is the VIX. You know that we've been talking a lot about how 20 was a resistance level. We expected it to be support, and then today the VIX opened up and it gapped up above 20, so then it moved up higher, but then it moved back lower and back under 20. So, you know, we got some nice volatility in the VIX too, volatility VIX, but there's some nice action going on here. So we see that there's put buyers, but then there's not a lot of put buyers, and it's looking pretty good. Excuse me, from the volatility standpoint. So, you know, we're really gonna have to see where this goes. The only thing that I can really see on the VIX is the 18 level. If it moves under there, then I wouldn't be surprised for it to shoot lower. If it doesn't, excuse me, I don't really see it moving back up to 23 or 24, but maybe some choppiness, and then that would make it more quiet in the markets.
Yeah, let me jump into the other indices real fast here. I don't know if you're going to do that, but the Russell and the Nasdaq actually closed in the positive today. And I mentioned before that I always use the Russell as a priority in terms of index because it has more. You have 2,000 stocks as opposed to 30 or 500 or whatever. So that's a little more telling. It gives you a better view. And the Russell held up really well despite this morning's gap, and it closed positive. So overall, I think it's a pretty bullish sign for now. You had a huge white candle today, and it's also staying above this little gap here. And then if we go into the Nasdaq, same thing, huge bullish engulf, wouldn't you say? Right there. So, and let's take a look at the Dow real fast. Not as strong, right? The Dow possibly even a double bottom right here. You have a bottom here. You might be able to see that better on the hourly view here. Right? 1, 2. But I think the main thing here is closing that gap. The gap is always the main thing. Always provides some pretty strong barriers to support or resistance. And so that gap that we're facing, at least the market is facing, needs to be closed in order for it to move higher. You got some stocks you want to talk about?
Sure. Excuse me. Just a disclaimer on these stocks. Just to let you know that this market the bulls are really trying to decide if prices are cheap, like I said before, and they want to know if they can all come back in. But it seems that the bullish optimism is just not there yet because they're trying to churn out a base. So with these stocks that I'm going to recommend or just show you guys, I definitely recommend taking profits earlier than before, just until the bulls get this momentum coming in and their enthusiasm picks up. The first stock that I want to look at is TGI. Okay, well, TGI has been side trending for about, or not really, yes, side trending for about 3 days. And I'm going to say a move above today's high would be a nice entry from the long side. And I wouldn't be surprised if it's going to retest that $99 to $100 level. But the next stock that I want to take a look at is MORN. Okay, this stock has been side trending for about 3 or 4 months now. And the line in the sand is 61. So, if this market continues to move up higher, the bullish enthusiasm continues to pick up, and this thing breaks above 61, that's the range. That's a great, that'll be a great long.
Yeah, I like stocks like this where it just builds a nice base because it's building a foundation on which it can break out from. And these are the setups that I look for day in and day out, and I can trade this thing, almost every single day as long as I see this type of base setup, especially when it's at a previous high or 52-week high or whatever. Going into my list, I'm gonna talk about some of the stocks we've been talking about either on Trade Alerts or on the previous webinar. TSCO, same thing. You have this base here, maybe not as long as the Morningstar one, but still a base is a base nonetheless, and it broke out from that base above 65, and we're seeing some pretty good volume coming into this stock. It does look slightly, if we go into the hourly view, slightly stretched, not too bad though, but if it can kind of pull back a little bit, then that would make for a pretty good entry, a pullback entry into this stock. TEO was something we've talked about on the forum today. Pulled in a nice hammer right at this 25 level, and I picked up a few myself, and this is looking pretty good as long as we get some follow through. And I mentioned especially above 26, that would attract more buyers into this stock here. Let me go into, I think I also mentioned QLIC. Last time we said wait for a breakout above 31, and now we're back here at this previous high. But you kind of want to let it rest a little bit, probably form a little handle. This is your cup, and then could be forming some kind of a handle right there. And the same thing can be said with Exam here. We made a nice trade, waited for that breakout above 25, and then took profit around 26. And that's, again, right, you always want to take profit, especially in this market. I mean, if you're up a few $100, it's better to be up a few hundred than to be down, a few hundred. So that's all I can say. So same thing. You probably want to wait for some kind of a handle to form. You have this cup-looking thing here, and then forms a little base, and then just watch for that breakout above 26. Volume, it's kind of a low volume stock. It's not that high, but it's still a tradable stock in my eyes. And I think I have one more, just on top of my head. I kind of forgot already. Let me see here. Yes, Wynn. Now, in light of today's situation, Wynn earlier was providing to be a stock that could be shortable. You have this base here, nice pullback. So if it broke underneath this base, this support, then that would be a good short. But today, like I said, in light of today's reversal, it looked like it could probably stay around this level. But if the market, never be surprised if the market happens to turn around, then I would keep an eye on Wynn as a possible short towards the downside here. So again, you always want to have both sides, both the bullish and bearish side, just in case, because you really just don't know what's going to happen the next morning. Anything else you want to add here, Chris?
You know what? Looking at that Wynn example, something just popped up when you had zoomed in, and you were showing that base that it was forming.
Yeah.
You see that doji and then the black candle after that doji?
Okay.
Is that a bearish engulfing pattern, and is it time to go short? And a lot of traders, especially when they're new to candlesticks, they just see that black candle wrapping around that small real body, and they say, hey, you know what? It's this pattern. Let's act on it. But if you know that the trend that Wynn was in a downtrend. So you have a downtrend, and then you have a doji wrapping around, and a black candle wrapping around a doji. Is that a bearish engulf? No. But look at the next session, and this is kind of a different advanced candlestick pattern called a piercing pattern. And you have this white candle getting deeply into the black candle, closing at least 50% above the middle of the black candle. And it's just knowing these little differences is going to really help you, especially engaging the psychology of this market. Because if you would have went short on that supposedly bearish engulf pattern, that would have been around 130, and it rallied up, a couple of days later to 135 something. And I don't know if you would have been able to hold through that 5-point move up.
Yeah.
So it's little tricks like this that I like to use to gauge psychology behind markets.
Yeah, Chris is you're definitely pretty good with your candles here. One more I want to mention to you guys is Lulu. I think Lulu, surpassed that benchmark level of 100. Last time it tried doing that and it failed miserably, and it pulled below its 50-day. But recently it managed to just plow right through and back up above 100. So that tells me people are now ready to buy Lulu for over 100. Right here, they weren't ready yet. But I guess after earnings came out and they realized, okay, this company is legit. It's got some value behind it. So that triggered buyers to push it above 100. And so you can see that on the chart, that the 100, usually these 100, 200, 300 levels, they're pretty significant, okay? Especially moving past, it's the first time moving past 100. So as far as entering, I think it's kind of a bit late. I'm sure Chris would say the same thing. If it can form some kind of a base and it stays above 100, that would be pretty good for Lulu. Almost kind of reminds me of the same thing with Fossil here. You see how it moved above 100 and it just kind of built a long-term base above 100, and it just slowly crept higher from that point on. So you see the same thing. Stocks that stall, it needs time to rest, and then builds a base. And so these are the things that I like to look for, just bases. But other than that, I think that's it for today. Another exciting day in the market, and hopefully next week. Like I said, it really depends. If this is a hammer and it provides some follow through, then we actually might see some gains next week. But it's still too early to tell. But tomorrow should be interesting. I'm looking forward to see what tomorrow brings. So anyway, well, we'll talk to you guys next week. Have a great weekend.
Thank you, guys.